Hi and welcome to Inderes TV. Sampo Group published its first quarter result today, and we have Group CFO Knut Arne Alsakeria here to comment Sampo's result and future. Hi Knut.
Hello.
It was a good result and better than expected. How would you summarize first quarter?
Well, I think that is very easy. We had a very good start of the year with solid first quarter results across all parts of the business.
Especially IF was fantastic, perhaps a little bit weaker quarter after that. What was driving IF?
I think we've had a number of good quarters lately. And the first quarter of this year was not any different. We have a strong growth. When you adjust for currency fluctuation, we have a top line growth of more than 6%. It's driven by our growth initiatives, which, for example, is the personal insurance space in our private business area, the small and medium business focus in the commercial segment. And we also had a very strong 1/1 renewal, again, on the industrial side. Then, of course, growth is also helped by high retention, happy customers with high retention levels across all business areas. Growth is driven by the fact that we continue to price for the claims inflation that we are seeing. And also contributing to the good performance is, of course, as always, a focus on the underwriting we do with a strong underwriting performance, strong combined ratio again, and as always, a strong cost focus across the business.
This was the first quarter where you implement new accounting standards. What are the major changes that private investors should be aware of?
For private investors, I think it is super important to think about Sampo as if nothing really has changed, because there is nothing that has changed in our business because we have new accounting standards. Then these accounting standards bring in some technicalities in our accounts, and my apologies for having to read maybe our financial statement a little bit more thoroughly, because these are the standards that the whole industry implements. But there's no changes in the business. But to summarize some of these technicalities, we now have a market valuation of both the liability side and our asset side, and changes in these market valuations come through the P&L. That's basically shortly what has happened. That might, from time to time, on a short-term basis, lead to some more volatility in our result also on the upside. This quarter, I think it was also from an accounting perspective, business as usual in terms of the result we produced, where some of the lower interest rates, which then had a negative effect on our P&L, was offset by a good result on the investment side. So no drama from the new accounting rules in the first quarter.
All right, let's talk about the market. Given the current uncertainty in economy and decreased purchasing power of households, how you see the market environment in Nordics right now from Sampo's perspective?
There's really no big changes at the start of this year in the Nordic insurance market. It remains competitive but disciplined. We continue to have customers that like our products and leads to high retention. So still high retention across the business areas. And in general, the insurance sector and the P&C insurance sector is a good place to be when the economy at large is more uncertain which impacts from time to time other industries more than the P&C insurance space.
You are not seeing any customers switching to cheaper products or increasing customer turnover rates?
No, there's no. It's the retention rates remains very, very stable, and we do always offer a variety of products alternatives in all our main product lines, and there's no major change in customer behavior as we speak.
We haven't talked about yet Mandatum, and it is probably coming spin-off what comes to Mandatum. So why does it make value for shareholders to get away Mandatum from Sampo?
It gives our shareholders 2 shares, 1 share in a pure play P&C insurer, where we will continue to focus on the excellent businesses we have, continue our underwriting focus, and deliver the results that our shareholders expect us to deliver. Then we have an opportunity in the P&C side to continue to make our balance sheet efficient as we reduce the risk profile of the remaining Sampo compared to having Mandatum as a part of the group. Then they receive a share in Mandatum, which have a possibility to pursue their growth strategy even more ambitiously than what would be natural to do as a part of a P&C group.
Mandatum is a big company, but it's not necessarily well known among investors. So what kind of company Mandatum is? Could you give an overview?
Sure. Mandatum is a large financial services provider. It's actually the second largest life insurance company in Finland, with more than a quarter of the Finnish life insurance market. Then the business of Mandatum, the core of Mandatum is very much focused on the corporate side of the Finnish life insurance market. It's supported by a traditional life book, a so-called with-profit book in English, that's in runoff. And that book of business is constituting a lot of the capital requirement that Mandatum has. So as that business runoffs, that will release capital from Mandatum to either pursue growth opportunities or pay dividends. It has a strong balance sheet to start with, which also is, of course, needed, but support growth initiatives. And then it has what is more new, but still growth possibility within the wealth management and institutional side, also outside of Finland.
There is some excess capital in Mandatum, so what are your thoughts? Are you going to leave that capital to there for an M&A buffer, or take that for an extra dividend to parent company Sampo?
Well, when it comes to the demerger as such, what is of course important to remember is that there's no capital that disappears. The capital is sort of remains with our shareholders through being shareholders in 2 shares. So it's sort of really no change. Then we are doing some transactions between Sampo and Mandatum, which will leave the Mandatum balance sheet and solvency position very strong. But it will also lead to, through sales and repayment of debt, to some liquidity flowing from Mandatum to Sampo post the demerger.
Yes. Then comes one question that investors and analysts have asked you dozens of times. Top Denmark, you didn't bought any new shares during the first quarter. Would it make sense to buy gradually Top Denmark and eventually bid for the entire company?
We have from time to time bought shares in Top Denmark. And if there were blocks for sale, sort of collection of shares for sale, if you like, at prices which we found reasonable, we would be interested. We've shown that interest in the past. There hasn't been any such blocks offered to us in the first quarter. For us to sit and buy Topdanmark shares in the market on a daily basis make no sense. The liquidity in Topdanmark is very low. It would basically be peanuts that we would be adding to our top position. In terms of the larger question on owning all of Top, first of all, we are happy shareholders in Top. It's not a problem to own half of it. But of course, as we've said, if we have an opportunity to buy more of Top at the right price with the right business case, of course, this is a natural addition to our Nordic P&C franchise.
All right. Then comes the final question, and I think this is the most important. Sampo is finally a pure P&C player. What do you expect to be the key value drivers the coming years?
Key value drivers in the coming years, I think we create a lot of value currently, and I think that will continue through organic growth. So on the side on your previous questions on M&A, we are creating a lot of value through our organic growth, and I mentioned a few of those initiatives earlier during this interview. Then, as always, we will continue to focus on underwriting, having the right pricing, develop our skills within that area as we've always done. We will continue to invest in digital capabilities, in customer service, in claims management. We have the opportunity, which also alluded to earlier, to create a group balance sheet with a higher return on the capital we have to commit to the risk that we carry, because it becomes more efficient. It reduces the risk profile of the group, and we have a possibility to continue to further work on that with even more benefits as a pure play P&C insurance group. And of course, we have a UK franchise with a top-line growth at the start of the year close to 40%, which creates additional possibilities in terms of the future P&C franchise of Sampo.
Thanks for your time.
Thank you.